Welcome back to our channel. Today we will discuss the 7 key differences between the cash flow statement and the cash budget. The cash flow statement tracks the inflows and outflows of cash, while the cash budget predicts future cash flows. The cash flow statement is a historical record, while the cash budget is a forward-looking financial plan. The cash flow statement indicates the sources and uses of cash, while the cash budget shows the expected cash receipts and payments. The cash flow statement provides information about cash from operating, investing, and financing activities, whereas the cash budget focuses on overall cash availability. The cash flow statement reflects the actual cash transactions, while the cash budget estimates the cash positions. The cash flow statement is prepared retrospectively, usually quarterly or annually, while the cash budget is prepared in advance for a specific period, often monthly or quarterly. The cash flow statement follows the accrual accounting method, whereas the cash budget follows the cash accounting method. The cash flow statement helps evaluate a company's liquidity and solvency, whereas the cash budget assists in financial planning and controlling. The cash flow statement is a mandatory financial statement for reporting purposes, while the cash budget is an internal management tool. In summary, the cash flow statement looks at historical cash movements, while the cash budget focuses on projecting future cash flow positions.